Welcome back. Well, let's talk about the big headline coming in from the commodity space, and that is the rally that we have seen in crude prices, up around 35-36% this year itself, sitting at a 5-month high. Manisha Gupta, as always, joins us to tell us the reasons why the crude is on the boil. Manisha, good morning.
Morning and thank you. Well, yes, the crude oil price is clearly on a boil at November highs. And as you pointed, the Brent crude is now 31% up and the U.S. crude is sitting on 41% gains for this year until time. Well, while, of course, we have been talking about global supplies being hit by OPEC-led production cuts, the U.S. sanctions on Iran and Venezuela, but now there are concerns over exports from the war-torn Libya as well. Libya in the last month produced 1.1 million barrels per day, and Libya is a major exporter to the Europe consumers there. So that supply concern really seems to be adding premium. We are nearly 45% up from the retracement from the December lows, and the markets do anticipate that this quarter could actually be building up on the gains that we saw in the previous quarter. This is a strong demand period. There also is an expectation that you might be looking at a small deficit as well coming into the global markets. So everywhere that you look, there is money riding on the strong fundamentals when it comes to crude. Add to that the kind of events that you have today, and that could be supportive. There is the Brexit summit, trade meeting between European Union and China. So markets will watch out for further cues from that.
All right, Manisha, thanks a lot for that. With that, we take a look at what's taking place in the F&O and the flow space. Well, yesterday we did not do too well for the markets. The Nifty ended just above that 11,600 mark, and that was because there was net outflows from the institutions. While the FIIs bought about 330 crores, the domestic institutional investors sold more than the FII purchased, and that has happened very rarely in just the last few weeks of FII purchase that we've seen. The one thing that stood out was the India VIX, which crossed the 20 mark. Remember, ahead of big events, the biggest one in the last 5 years would be the elections. The India VIX is now inching up. In fact, it's the first time in 2019 that it's crossed 20. The last time it crossed 20 was on December 11th, 2018. Apart from that, remember, in 2014 elections, the VIX actually surged from 20 to 24 to 29, and on 9th May, it also hit a record high of 37.7. So, yes, it is about 20, but it's only going to go higher as we approach the election date. The FIs sold in index futures, unwound some long contracts, added some short contracts. So, about 5,000 longs were unwound, 5,000 shorts were added. But there was purchase in index options, 1,200 crore worth purchase in index options. Most of that attributed towards protection, buying 18,362 long index puts. Now, the FII action in index calls was very, very interesting. There was an equal number of long calls and equal number of short calls that were added in index futures, close to around 14,000 long calls and 14,000 short calls. Looks like the FIIs are initiating a bear call spread, which is selling the near-term call for a higher premium and buying the further to strike call at a lower premium to hedge yourself. So 11,600 call added about 6 lakh shares for a premium of 65 rupees, and the 11,700 call was the most active, added about 11 lakh shares for a premium of 27 rupees. So maybe the smart money is looking to pocket the premium that is available at 11,600 and 11,700, and if the markets were to go higher, they're hedging themselves by buying the 11,800 call. At the lower level, we have 11,550 put, which saw some writing, and that coincides with the recent lows, April 8th, which was yesterday, and the RBI policy day, April 4th. The lows were 11,550, 11,560.
Okay, Mangalam, thank you so much for that. But with that, it is curtains down on this edition of Our Breakfast. From the team and myself, thank you so much for watching.